Due to increased environmental concerns caused by engine vehicles, electric vehicles are fast becoming the new trend in the automobile industry. Automakers across the globe are moving with speed to shift to EVs to meet the growing demand for electric vehicles. And one major EV manufacturer that has placed China on the global scale is NIO. So, is NIO stock attractively positioned to reach $500 in 2022? Be sure to watch this video till the end to see why you should buy NIO. Hello everyone and welcome back to Fix Your Finance. Here you will learn everything about your finances. Don't forget to subscribe to this channel and turn on notifications so you don't miss any video. NIO is not a new term for the auto enthusiast, but if you live under a rock, you're probably wondering what exactly NIO is and what it does, right? Well, worry less because we got you covered right here. NIO is a pioneer and a leading manufacturer of premium smart electric vehicles in China. Located in Shanghai, the company prides itself on offering some of the best EVs in China. Established in September 2015, NIO has manufacturing facilities in Nanjing, Jiangsu Province, Pune, Maharashtra, Lancaster, California, Tilburg, Netherlands, and San José dos Campos. The company's CEO, William Li, has managed to positively market the company, winning investors' interest to raise over $1 billion since its establishment. Some of the major investors in this company include Tencent Holdings, Temasek Holdings, PTE, Beidou Incorporated, Sequoia Capital, among other notable private investors. Despite being younger than some of the existing automakers, NIO seems to be well positioned to topple the giant electric automaker Tesla. It has differentiated itself from the existing automakers by tackling range anxiety, which gives it a competitive edge. Despite building its charging stations, which is usually a major challenge, the company has gone ahead to introduce a purchase-based subscription model, which seeks to lower the cost of purchasing NIO EVs, considering that the battery is the most expensive component in EVs. The move also reduces the risk of owning a battery pack by allowing users to swap out for higher or lower capacity batteries as needed. In addition, the innovation of swapping batteries has also been extended to charging. That means that instead of NIO EV owners having to wait hours to fully charge their drained battery, they can just drive to a battery swap station and have a new battery installed in 3 minutes. The battery swap strategy is great and is a move that is yet to be adopted by any other EV manufacturer. Ideally, existing companies rely on the plug method, which takes about 30 minutes to fully charge at most. But that does not mean that you cannot charge your NIO the normal way using a plug. It is just a time-saving strategy that the company thought to introduce to solve the global challenge of EVs recharge. At the same time, the company has managed to solve some of the range anxiety by introducing several ranges of EVs under its flagship name. Now, all these steps put NIO in a strategic position to battle out with its close competitors in the auto industry. Even though the infrastructure needed for investing in an electric car manufacturing plant is very enormous, NIO has managed to make a huge milestone in a short time. And considering that investors are very skeptical in investing in EV startups, it calls for none other than the appreciation that we already have NIO EVs on our roads. Kudos to NIO for achieving what is unusual among many EV startups. Ideally, mass production of cars is not a cheap thing. So let's look at the technical side of this stock. NIO stock is currently trading at $46.17, down 1.28% in the last 24 hours. With a market capitalization of $75.65 billion, this stock managed to record a high of $47.38 during the day and a low of $45.47. This year, the stock has not impressed many investors, as it has only gained about 11% for the last 6 months. But there is no doubt that NIO stock has great potential inherent. The fact that it has at one point revealed to the world its potential to achieve massive growth cannot be taken lightly. This after its share surged a massive 1,100%, hitting a record high of $50 in 2020 and making it appear among the biggest winners on Wall Street. This was as a result of the $1 billion incentive that the company received from the Chinese government. It was a big signal that NIO can do the unthinkable given a conducive market environment and support from the government. And indeed, the Chinese government is committed to supporting EV startups. Already, the Chinese government has issued new regulations aimed at prohibiting the sale of gasoline engine-powered vehicles by 2030, and this will even create more demand for EVs where NIO stands to benefit from the large market China offers. Experts have already projected that by as early as 2025, about 17% of new vehicles on the Chinese market would be EVs. Now, what does this mean? It translates to about 31% sales growth annually in the entire electric automaker industry. Now, one reason that could have derailed NIO's stock growth this year could be explained in the EV's global chip shortage. It is not news anymore that the global shortage of semiconductor chips caused by the COVID-19 related challenges and high demand for the chip highly impacted EV automakers, the manufacturer of electric vehicles, and its scarcity thus translates to lost businesses within the auto industry. So, did NIO suffer the global chip shortage? You may want to ask, right? Well, like any other electric automaker, NIO was not spared. The company was compelled to close down operations for some time due to the global chip shortage, and this is where the rain started beating this stock. The shutdown of operations resulted in unmet production targets. NIO was expected to deliver about 20,000 to 20,500 EVs for the first 3 months of 2021. However, the shortage in the supply of chips means that NIO was cut short by 19,500 units. Now, this is surely enough to impact the value of the stock. However, things look positive as the gap in chip supply has since been corrected and the company is achieving its targets. In June 2021 alone, NIO delivered 8,083 electric vehicles, which formed a new monthly record representing a massive slightly above 116% year-over-year growth. In addition, NIO managed to deliver 21,896 EVs in the 3 months ended in June this current year. Now that enabled the new startup to hit yet a new quarterly record, representing a major surge of 111.9% year-over-year. This now places the total vehicles delivered by NIO as of June 30 this year to 117,597 electric vehicles. Now, this is positive news for the future of this company. With this growth, NIO seems to have gained traction, and now it targets to produce 10,000 electric vehicles every month for the remaining half of the year. Should it maintain this level of growth, then we're likely to see NIO record new record highs sooner than we all anticipate. What follows is that this is just one of the right times to buy yourself NIO stock just before the boom happens. So, can the stock price of NIO hit $500? Now, that is a very significant question that every investor and potential investor alike is interested to know. And to bring you to terms with that, we shall have to study the past technical trend of this stock. Well, looking back at the technical charts, we get to realize that NIO stock experienced a massive bull run in 2020. Its price took a steady uptrend, rising from as low as $1.5 in late 2019 to soar to a new record high of close to $67 in early 2021. However, like any other stock, NIO is bound to face some up and down moments due to the market conditions. And due to the impact of the second wave of the pandemic, the price of NIO stock came falling to where it is now, enjoying a support level at $45. But according to analysts, this is a stock that has great growth potential despite having dipped in value. According to Wall Street analysts covering NIO stock, the stock is a strong buy. This considering that 7 out of the 10 analysts gave NIO a strong buy recommendation. 1 recommended a buy, while 2 analysts recommended NIO as a hold. There's a high possibility that NIO is going to display strength even as it nears the next earnings release. According to Zacks consensus estimates for the full year, the company projected earnings per share will drop by 65 cents per share, representing 1.52% from the prior year. At the same time, the Zacks analysts expect NIO to record revenue of $5.19 billion, which is a 115.7% growth from the prior year. And as we all know, whenever NIO releases its earnings reports, the stock soars. Considering the projected positive outlook for the next earnings release, we anticipate that the price of NIO stock will sure shoot to a new record high. This company has all the reasons to grow extensively in the future, considering that the global EV demand is expected to grow by 70% next year. Already, NIO plans to manufacture about 150,000 EVs per year by the first quarter of 2022. Now, this target is likely to be met considering that the company targets 10,000 units monthly and that it has so far achieved about 117,000 units. Therefore, NIO stock to $500 is not a surprise. Why? Consider the story of Tesla. Tesla was considered the worst stock in its early years, worse than even where NIO is. For the first 5 consecutive years, Tesla was yet to make a single profit. But look at where it is, monopolizing the entire EV market and leading as the most valuable automaker with a market cap soaring over $600 billion. So NIO is just in the right position to make a great impact. It has strong support from the government of China, it is located in an area with the highest demand for EVs, it has advanced battery technology, and most of the analysts favor it. So, what is your take on the possibility of NIO hitting $500? And how soon do you see this happening? Let us know in the comment section below. Thanks for watching. If you enjoyed this video, make sure to give it a like and subscribe to this channel. Also, remember to turn on notifications to never miss out on any of our latest episodes whenever we post. I look forward to seeing you in the next video from Fix Your Finance.